can easily say ORB means open range breakout. Just plot the open range levels. It could be 30-minute range or 1 hour range. If the price breaks the upper line, then take a long trade. If the price breaks the lower line, then take a short trade. It sounds very easy, right? But it can go wrong because of the noisy markets and false breakouts. Definitely you will not be able to handle the sudden market changes at the intraday level. You must have filters to avoid the failed trades and a potential target point to make profits from the ORB strategy. You will find those missing links in this video. Learn how to be a better trader with my new book, How to Make Money in Stock Market Trading, which is published with India's leading publisher, Jaico Publication. It is packed with trading strategies, real life stories, and easy to understand advice. The link is in the description. I also have a trading quiz in the middle of the video, and 3 lucky winners can get a signed copy of this book for free. So please watch the video till the end. A person tries to cook a biryani for the first time. He follows an expert recipe step by step, but the end result doesn't taste good. He tries a few more times, but every time he fails to prepare a perfect biryani, even after following the expert recipe properly. The simple reason is expert was using basmati rice and this person was using a plain rice. Basmati rice requires 1:1.5 quantity of water, whereas normal rice demands 1:2 or even 1:2.5 amounts of water. Without knowing these underlying factors about ingredients, anybody will continue to struggle with biryani without any improvement, right? Similarly, many people try to follow trading strategies blindly without trying to understand the in-depth aspects of it. I will explain the 2 important functionalities of the market. One is possible peak, another one is day structures. Possible peaks help you to understand why ORB provides a special edge in your trading. Day structure helps you when to avoid taking trades using ORB strategy, because having no position is also a position and not losing money in trading is similar to making money, right? Friends, you take any trading instrument, be it Nifty or Bank Nifty or Fin Nifty or any stock to that matter. They will make one of their peaks, either days high or days low, within the first 1 hour range after the market open, and it works 80% of the time. I'm sure you didn't get the point, right? Let me explain in detail. Let's take the example of Nifty. This is days low, do you agree? And this is days high. This is Nifty 15-minute chart. So what I'm trying to say is, any trading instrument will make one of its peaks, either days low or days high, within the first 1 hour range after the market open. Difficult to believe? Just look at some of the examples. This is Reliance 20th Feb. It made days high on the first candle itself, right? One more example, HDFC Bank from 20th Feb to 22nd Feb. Just see this, it made either days low or days high in the first candle itself, right? Let's take one more example. This is Fin Nifty. If you observe Fin Nifty very carefully, it made either days high or days low within the first 1 hour, right? This is a 15-minute chart, 4 candle represents 1 hour. So it made either days low or days high within the first 1 hour range, right? This is Infosys from 14th Feb to 21st Feb. If you observe Infosys very carefully, it made days high on the first candle itself, right? First candle, it made days high, continuously it went downside, right? Did you know this concept earlier, friends? This concept called as possible peak. If you didn't know this concept earlier, could you please comment, I'm in love with possible peak? So the basic idea of ORB is, any trading instrument will make either days low or days high. In this case, it is days low within the first 1 hour range after the market open, and the high, there is a 80% of probability of that price will continue in the same direction, and ORB aims to make profit from this case. But the catch is, we don't know how much price will move and where to book our profits. 3 things are important to make profits in intraday trading. Number 1, direction of the price. Number 2, magnitude of the price. And number 3, best entry and exit point. Possible peak only gives clarity about the direction of the price. We need to know the magnitude of the price so that we can plan our exit. This is where day structures come into the picture. See friends, day structure came from market profile, and market profile is a very wide topic to discuss, and day structure is also a big topic within market profile. In this video, I try to explain day structures in a crisp and compact manner, but to know in-depth aspects of day structures or market profile, you need to visit my website. I have written a detailed article about day structures as well as market profile in this article. So if you read this article, you will get complete information about day structures as well as market profile. Friends, day structure are derived from IB range. Using IB range, we will derive different types of day structure. So IB range stands for initial balance range, which is nothing but 1 hour range in the Indian market conditions. So right now Indian market starts at 9:15 a.m. and it ends at 3:30 p.m. right? So 1 hour range is the IB range, which means 9:15 to 10:15 is the IB range. So there is a talk of market extension in the future. If they extend, IB range will differ based on the extension period. So right now market operates between 9:15 to 3:30 p.m. and IB range is 1 hour. So based on the IB range, there are 5 different day structures as of now. So first one is a normal day. In normal day, it is recognized by wide IB. When I say wide IB, initial 1 hour range will be very wide, and the entire day's price action will be within the IB range. I will repeat once again. Normal day is characterized by wide IB and the entire day's price action will be within the IB range itself. This is an example. Next, normal variation day. The characteristics of normal variation day is medium IB. Normal day is big IB, normal variation day is medium IB, and price moves outside of IB, either upside or downside, equal to the length of IB range. I'll repeat once again. In normal variation day, IB will be medium. Price moves outside of the IB, either upside or downside, equal to the length of IB range. This is an example of normal variation day in Nifty. Next is trend day. In trend day, the IB will be very small. Okay, it will have a small IB, and the price moves outside of the IB, either upside or downside, more than the IB range. Okay, this is an example of it's a more than IB range. This is an example of trend day in Nifty. Next is neutral day. Neutral day occurs very rarely at important support levels or resistance level. The characteristics of neutral day is also medium IB, where the price moves outside of the IB and both the sides. It also goes upside, it also comes downside. It occurs very rarely at important support levels, important resistance level, important reversal points. You can see this neutral day. This is an example of neutral day in FinNifty. Recently we got this. Next one is non-trend day. So the characteristics of non-trend day is also medium IB. This non-trend day also occurs very rarely whenever the market is expecting something like Fed rate results or RBI quarterly results. When the market expects something, we get non-trend day. Again, the characteristics of non-trend day is medium IB, and the price stays within IB for most of the days, most of the time on that particular day. This is an example of non-trend day recently in FinNifty. If you see here, medium IB is medium and the price for the entire day stayed within that range. Now, how to decide IB is small or wide or medium, right? Usually it comes from experience. We will look into some charts and we will decide whether the IB is small or wide or medium. See friends, this is FinNifty chart. So what you can do is do this reset chart view. So if you do this, you will get an idea how this price is going forward, actually how it is going. So then you can zoom into it and then you can see, for example, this line indicates the session break. Okay, this is a new day, this is a previous day, this is a new day, like this. Okay, so in this 4 candle, the first 4 candle represents IB range, right? So Time being, for 1 or 2 days, I will draw horizontal line and then I will explain so that you will understand it very easily. For the remaining thing, I will remove it. See, for example, this is the first candle, this is the second, this is the third, this is the fourth candle, right? So this is the IB range, right? So IB range is almost medium in this case. And can you see price stayed within the IB range, right? This is non-trend day in FinNifty in this particular trading day, right? So next is I will go to the previous day. This is the high day side. This is the first candle, and this is the low of the fourth candle. For example, it's here. This is the low. It's here. If you see this as compared to this is a wide IB, right? It is a wide IB, and price stayed within this range except this part. So this is a normal day structure, right? And again, coming to this, for example, this is the high and this is the low. This is the first candle, second candle, third candle, fourth candle. This is the 1 hour high, this is the 1 hour low, right? See, if you see here, IB range is medium. Price moved outside of the IB range equal to the length of IB range, right? See, for example, it's almost equal. This is the low of the next range. So this is a normal variation there, right? So once again, if we come back to here, this is the low and this is the high of the fourth candle. This is the high. So this is a wide IB range. It is a kind of normal day structure, but price moved a little bit outside. This is an exception. That is fine. And again, this is coming back to this. This is a small IB. See, this is a small IB. Price indicated the structure of trend day, but it didn't move. This is a non-trend day structure actually. Okay, sometimes there is non-trend day also occurs with a small IB. Again, there is a non-trend day here. This is a small IB. It's a non-trend day. Again, it is medium IB. It is a non-trend day here. In this day, it is a non-trend day. And coming to this is a medium IB. So this is a medium IB. Price moved outside of the IB range equal to the length of a little more than the IB range. This is a normal variation day. Coming back to this is the high of the fourth candle. This is the wide IB. It is a normal day. I hope you got some clarity, right? On a thumb rule, you can also use last 10 days average range. If the IB range is less than last 10 days average range, then it is small IB. If the IB range is greater than last 10 days average range, then it is wide IB. If the IB range is almost equal to the last 10 days average range, then it is medium IB. When you say equal, if the last 10 days average range is 100 points and if the today's IB range is 98, 99 points, don't say it is less or more. Okay, if little difference is okay. So whenever is little difference is there and it's almost equal, then we can consider it as medium IB. Now, I will repeat once again. There are day structures. There are 5 days: normal day, normal variation day, trend day, neutral day, non-trend day. In normal day, wide IB. In normal variation day, medium IB. Trend day, small IB. Neutral day, medium IB. Non-trend day is also medium IB, right? But the most important thing is neutral day and non-trend day occurs very, very rarely. Neutral day occurs at the important reversal levels or important support and resistance level. It occurs very rarely. And non-trend day also it occurs very rarely whenever the market expects for something like Fed rate or RBI rate, anything like that. So out of 100 days, 10 days is maximum, including both neutral day and non-trend day. Even 10 days is also very high. So we can easily neglect this. The remaining 3 days are normal day, normal variation day and the trend day. Now the most important point is normal days characterized by wide IB, normal variation days characterized by medium IB and trend days characterized by small IB, right? So at 10:15 after 1 hour of the market open, if you get wide IB, there is a high probability of normal day. If there is a medium IB, there is a high probability of normal variation day. If there is a small IB, there is a high possibility of trend day. Now, do you think both normal variation day and trend day aligns with the concept of open range breakout? Did you get my point, friends? Out of 100 trading days, approximately 70 days are normal variation days. I will repeat once again, friends. Out of 100 trading days, 70 days are normal variation days, which means there will be IB, medium IB, price moves outside of the IB equal to the length of IB, right? So this is very similar to ORB concept, right? Normal variation day. And this also, it's very important thing is we can take ORB trades whenever we get a medium IB range. Why? Because there is a high possibility of getting a normal variation day, and even if we get a small IB also, we can take the bet because there is a high possibility of trend in the same direction, right? But the only thing is, whenever you get a wide IB indicates high probability of normal day, and there is a high possibility of price staying within the range. So except normal day, you can take trade whenever you see a medium IB and that small IB, because medium IB indicates high possibility of normal variation day and small IB indicates possibility of trend day. The core concept of ORB is very simple, friends. There is a IB range, 1 hour range. If the price breaks on the upside, take a long trade. If the price breaks on the downside, take a short trade. We'll explain with the help of horizontal lines. For example, this is one day, this is one particular day, 50-minute chart. So this is IB range, right? For example, this is IB range. So whenever the price breaks the high, for example, this is the high. Okay, so when the price breaks above or below, so if it breaks above, we will take a long trade. If it trades below, we will take a short trade. For example, price broke on this particular candle, right? So this is where, according to ORB, we need to take the long trade, and stop loss will be below the low of the breakout candle. It comes somewhere here, right? So, and we need to trial the stop loss. Okay, it moved. This is a normal variation day structure. It moved a little bit outside of the IB range. So don't worry if it looks like a loss making trade, because we are going to I'm suggesting two filters as well as trailing stop loss method to avoid these kind of failures, but try to understand the concept. So 1 hour range, if it breaks on the upside, we will take the short trade. If it breaks on the downside, we will take a short trade. Upside a long trade, downside short trade. Okay, this is an example for long trade. When it comes to here, for example, on this particular day, so this is the high and the fourth candle low is this is the low, right? So this is the high and this is the low. So if it breaks on the downside, according to ORB strategy, we need to take a short trade here, and stop loss will be above the high of this particular candle. It moved again little bit here, so it is also kind of a normal variation day structure. It is here, right? So normal variation day structure or a trend day structure. This is small to medium IB. So price moved outside of the IB range on the downside. So this is the ORB strategy, the original ORB strategy. But ORB original strategy doesn't give any explanation about to filters to avoid these kind of losing trades. For example, if you come, if you start from the beginning, you will get many failed trades. Example, for example, if you see here, this is the high of the IB range, right? So if you see here, this is the IB range, right? On this particular day, 1, 2, 3, 4, this is the high of the fourth candle. Price broke above the high of the IBI. If you would have taken a long trade, it would have given a loss, right? So this is one thing. And again, similarly, it's here also. Okay, I think here it is fine. It went fine, not a problem. Here there is, see here also. So this is the IB high, right? This is IB high, this is IB low. Price broke the low, IB low here. If it would have taken a short trade here, it would have been came back and it would have taken your stop loss, right? You wouldn't have made profit, this kind of thing. So original ORB strategy will not give any mention or explanation about filters to avoid these kind of failed trades. But I will give two filters to avoid these kind of failed trades. You might think, why do we need a filter? But friends, filter is very, very, very important. I will give a simple explanation to know why do we need a filter in ORB strategy. Let's say you take 10 trades. Out of 10 trades, 5 are profitable trades and 5 are losing trades. Okay, and in profitable trades, you make 3,000 rupees each from a winning trade, and you lose 2,000 rupees each from a losing trade. Okay, so in total, in winning trade, you make 15,000 rupees, right? 3,000 into 5, you make 15,000 rupees. Whereas from losing trades, 2,000 into 5, you lose 10,000 rupees, right? So you make profit 15,000 rupees from winning trades. You make a loss of 10,000 rupees from losing trades, right? So now in total, your profit is 5,000 rupees after taking 10 trades. I hope this is clear, right? Now, let's say by using a filter, you get rid of not one, not two, and if three losing trades. By using a filter, if you get rid of just losing, three losing trades, you lose only 2,000 rupees. 2,000 into 2, you lose only 4,000 rupees from two losing trades, right? Now, straight away your profits from 5,000 to jumps to 11,000, which is nothing but over 200% returns, right? So this is where we need a filter, friends. Filter is very, very important to avoid losing trades. Friends, first filter is using the wick on the breakout candle. So if the price is breaking on the upside, means we will look at the selling wick on the breakout candle. If the price is breaking on the downside, which means breaking the IB low, means we look at the buying wick on the breakdown candle. So I will explain in detail. Let's say this is the IB range and this is the price movement within the IB range. Now price came and it broke the IB high. So do you think this is a sufficient bullish candle? Yes, right, because there is no selling wick on the top. So this indicates complete buying, right? Similarly, if you look at this particular candle, there is some selling wick, right? So the price is trying to break the IB high, but still there is some selling is coming on the breakout candle. Do you agree? And one more example is price is again in this case also trying to break the IB high. The color is green because the close is above the open, but there is a big selling wick, right? That indicates selling pressure actually. So even though the candle might appear like a bullish candle because of the green color, but in reality the selling pressure will be very, very high in this particular candle. So as a simple rule, so what we can do is, it is better if we consider a breakout candle with a small wick. Okay, so if the price is breaking on the upside, means we will look for a breakout candle with small selling wick. If the price is breaking on the IB low or downside, means we look for a the breakdown candle with a small buying wick. So the rule is 20%. This is really better actually. If this particular selling wick on the breakout candle is less than 20% compared to the overall body, then we can consider it is as a genuine breakout and we can continue with our long trade. Okay, I will take few charts. Okay, this is Nifty on 14 Feb. So this is 50-minute chart. So 4 candle represents 1 hour range, that is IB range, right? So now if you look at this 5th candle very, very carefully, the price tried to break the IBI, right? As per normal overbid strategy, you would have taken a long trade here. But according to us, we will not take a long trade because we look for a breakout candle above high with less than 20% of the selling wick, right? But in this case, selling wick is high, selling is also high, right? It came down actually. But if you look at the 6th candle, 7th candle, the buying wick is, the selling wick is very less, right? It is also a breakout candle, but the selling wick is very less actually. So in this way, if you have taken a trade above the high of that breakout candle, usually we don't take trade immediately after we see the breakout candle, right? The price should break the high of that breakout candle. So that high came somewhere here, it came around 12:15, 12:30. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 and 13th candle, it broke the high of that particular breakout candle and price rallied on the upside, right? So this is where we avoid the losing trades using this 20% wick actually. Now we will take one more example. This is Nifty 23rd Feb on 2024. So now this is the IB range. 4 candle represents the IB range, and the 6 candle price try to break the downside, right? So as per normal ORB strategy, you would have taken a short trade. But as per our rule, the buying wick is more than 20%, right? We don't take the trade. And even up to 130, 145, around 130, we got one more candle, but still we don't take the short trade as per this filter rule, because the buying wick is more than 20%, right? I think it is more than 50% as well. So we don't take the short trade here as well. So only on this day, by using this filter, we would have avoided two losing trades, right? So always remember, not losing money is also, it's like a making money in intraday trading. So I always say one thing: don't believe my words as it is. I always say verify it on charts. For example, okay, this is Nifty. Let's be it Nifty only. We will start from the beginning. We will verify it on few charts. Anyway, this is the recent one I have already explained on the PPT. So we can check this. For example, I will draw two lines to represent IB high and IB low. This is the IB high, fourth candle low is, this is the IB low, right? Now see, price try to go downside in this candle and in this candle, right? Can you see this is more than 20% of the buying wick in both the cases? We don't have taken a short trade here, right? So we would have avoided one failed trade here, and see here price came here IB high. Here again we would have not taken a long trade because because of the selling wick, right? But here we would have taken a long trade because the selling wick is less than 20% compared to the entire candle, right? So this will be our entry point as per the filter, and this will be our stop loss, right? So we would have made little profit, but it is fine. We would have avoided a short trade, one failed short trade, right? We would have made money on this day. Again, I will plot IB. This is the IB high. This is the fourth candle high, and this is the IB low. These are the four candle represents IB high and IB low. For example, we would have avoided a short trade here, but we would have taken a short trade here. Again, it would have been hit the stop loss. This is fine. We would have taken one failed trade here, but again one failed trade we would have avoided immediately here. But again, if you see here, price break the IB low very clearly and less than 20% of the sell buying wick, right? So this will be our entry point, this will be our stop loss. You would have made profit, some profit, right? Again, in this particular day, this is the IB high, and this will be the IB low, right? So this 1, 2, 3, these four candle represents IB range. Price broke the IB high and selling wick is very less, right? So let's say we would have taken a long trade here, it would have been hit a stop loss. That is fine. Again, it is price breaking here or here. If you would have taken a long trade, you would have made break even or little bit of profit. So this is fine because the price is completely on sideways on this particular day. We'll move on. So this is one more day. This is the four candle represents IB range. There is no breakdown here. This is the breakout candle. Breakout candle consists of less than 20% of the wick. If you would have taken a long trade, if you follow proper trailing stop loss, you would have made little profit, or even if you think break even, it is fine. Coming to this is completely a non-trend day. None of the strategies would have worked on this particular day. Coming to this, okay, so four candle, this is the breakout candle. Again, if you would have taken a long trade, you would have taken a small stop loss, or it would have hit a loss, because again it is a non-trend day. It is fine. It happens very rarely. So coming back to this, we pull the line. This is the IB range. Okay, these four candle represents IB range. We won't take a long trade here because this is a selling thing. Here also we won't take a long trade because it contains more than 20% of the selling wick. Even if you would have taken also, it would have been hit a loss. But here the genuine entry, it is less than 20% of the selling wick, right? You would have taken a long trade here, you would have made profit, right? Stop loss will be below the low of this. Again, this I can go on like this. Okay, again, once again, here this is a IB low, this is the IB high. You won't take a Hey, sorry for the interruption, friends. This is the quiz time. Which of the following represents a blue chip stock? A high risk stock with potential for significant returns, a stock with low market capitalization, a stock of well established and financially stable company, a stock of a newly formed startup. So please comment your answers in the comment section, like A or B or C or D, whatever it may be. You comment your answers in the comment section. 3 lucky winners will get the signed copy of my new book for free. Thank you. Short trade here because the buying week is more than 20%. Here also you won't take a short trade. You would have taken it here, but it's fine. You would have taken a loss. That's fine. But what I'm trying to say is, if you follow this 20%, you can see here, it's very clear. You would have taken a short trade here. So what I'm trying to say is, if you follow this 20% wick rule, definitely you will avoid more than 50% of the losing trade as per ORB strategy. This is what I'm trying to highlight. Friends, I will make your job very easy. One simple option is to know the IB ranges. You can watch the charts manually, and whenever the 4 candles are completed, that means at 10:15, you can plot these horizontal lines like this, and then wait for the price to break on the upside or downside. So this is one way. For example, previous day you can move these horizontal lines like this. You can move like this. This is the 4th candle. You can move like this. So one more simple option is, there is an indicator to plot the IB range automatically. So my suggestion is, you can use that indicator because it doesn't involve drawing these manual lines work, right? And it also get confusion because horizontal lines will be extended for a throughout period, right? So that's also there, it might create some confusion. So there is a simple indicator which is, go to indicator section, type IB. Don't use this. There is an IB indicator from IB space, give IB space, see initial balance. So you can use this initial balance from Sanjay _ I think Ramanathan. You can use this indicator. At this point of time, 1074 people are using this. If you click on this, it will plot the IB range automatically for you. Can you see this? It is highlighted in light blue color. Now this is the 4 candles, high and low. So in this case, this is the IB range, high, low. In this case, this is the high, low. This is the high, low. So you can change these settings here. If you go here, here, 1 second, it is not working. See here, you can now change the settings here. Background, you can use more darker color, or you can use more darker color like this. Opacity you can increase. I think by default it had this. You can increase the opacity so that you will get more clarity. I would love to increase little bit of opacity in this case. So in this way you can use this indicator. This indicator perfectly plots the IB range for you. This is very easy to view and operate. If you just follow ORB strategy in trading, you can see it very clearly, right? Friends, in this section I will connect all the dots, okay, from the beginning. Now to follow ORB strategy, wait for the IB range formation. You need to wait in between 9:15 to 10:15 to form the IB range formation, to get the IB range formation, right? Then if the IB range is very wide, you need to avoid the ORB trades because it indicates a normal day probability, right? There is a high probability of price staying within the range. So if there is a wide IB, please avoid the ORB trades. If there is a medium IB but any event nearby, like for example Fed rate announcement is tomorrow, or RBI quarterly result is tomorrow, or if you are trading a stock, look for quarterly management results. Suppose sometimes quarterly management results also can result in non-trend days. If there are no events, if there is an event nearby, then you can avoid ORB trades. But If there is a medium IB, small IB, then no event nearby, then you can look for overbid trades. Okay, that's very important. And after the IB range formation, if the price is breaking IB high, then apply the filter rule. If the price is breaking the IB high, means the breakout candle contains less than 20% of the selling wick. If the breakout candle contains less than the 20% of the selling wick, then you can take a long trade. It's very clear, right? Suppose if the price is breaking the low of the IB low and buying wick is less than 20%, then you can look for a short trade. This is very simple. Now, in any trading system, money management rules are very, very important, friends. So the first rule in this system is don't risk more than 2% of your capital on any trade. Even if you have, even if you think the trade is very high probability, still don't risk more than 2% per trade. If you have 1 lakh rupees, if you take the stop loss, you should lose only 2000 rupees maximum per trade. The second rule is don't take more than 2 trades in one stock or one index. Let's say you trade Nifty, you take a trade, it hits the stop loss, or it's a break even thing. You take one more trade, again it hits the stop loss or break even. No, don't take more than 2 because it indicates volatility or sideways movement, right? So there is a high probability of non-trend day or volatile moves. So don't take more than 2 trades in one trading instrument. And third rule is don't take more than 4 trades in a day, or 4 or 5 trades maximum in a day, because suppose if you watch only Nifty, you may not get a trade under overbid strategy in Nifty. So it is advisable to watch 3-4 trading instruments and you can take maximum 4 trades in a day. Don't exceed more than 4 trades on overbid strategy in different trading instruments, because once you cross the 4 trades, it is very difficult to control your emotions, and your emotions will go out of control and you will take some trades which are unnecessary, and you will also end up taking more number of trades, or you risk more, you take more risk per trade. So hence it is always advisable to stick to your total number of trades to only 4 on any trading day. I hope this video added value to your time, friends. If you think it added value to your time, then you can like the content, you can subscribe to my channel and share this video with your friends. See you in the next video, friends. Thank you.